Baba is up almost 40% from the last time I screened and called a $79 on the stock. After reporting earnings beat on May 26 pre-market, the stock got up 6% and closed with almost 15% for the day. How good was the earnings report anyway? And what prices should you buy Baba for this quarter? Hello fellow investors, did you buy Baba last time we screened it? If you did, then congratulations, you're still in the money. 40% up. Wow. I wished I bought, but I didn't. But if I were you, I'd realize some of those gains and lock in some profits. Here is Baba stock earnings snapshot last May 26. I'm not going to discuss each number here because I'm not even sure if these numbers are accurate to the dot or not, but it has to be around these numbers. Anyway, aside from the revenue growth, everything else is just bad. Was it why the stock surged, the revenue growth, or was it China's economy reopening? I don't know exactly, but you must know it by now that I don't buy stocks based on their revenues. I buy stocks by the money they're making. And for Baba stock this quarter, I don't think they made money. So the stock surging for me was irrational, and I won't be surprised if the stock trades sideways or even plunge anytime from here. Just my unbiased opinion. I'm screening Baba again this time with our updated metrics. Baba is now down 65.6% of the highs. Still no dividends. EPS multiple is too high. Maybe the PE is just too high or the EPS is just too low. EPS here proves that it's lower now. It had a peak of 8.35 in 2021. Was it because of share dilution? Probably. 115 million shares diluted in 5 years. But look at 2021 to 2022. They bought back some shares. Maybe it's the start of something good for Baba. I pay $1 or less for 1% of the money they're making. I use the lowest margin of 20.99 here, not the 7, not the 11, not the 15, because I want to be reasonable when picking out the lowest margin to use. I consider not just these numbers here, but the previous margins as well. So I guess 20.99 is the fairest, lowest margin to use here. I use the highest margin of 28.05 to discount my margin of safety of 50%. Why 50%? Well, normally I use 30% here, but I want to discount also the risk of China and the conversion issues. To tell you honestly, these numbers I don't feel comfortable using unless I see the same numbers from one side to the other. Maybe I'll reconsider putting money on this stock. But until that happens, I want to discount more margin of safety here. Again, these numbers might not be the most accurate, but it has to be around these numbers. I took these numbers from Seeking Alpha, Macro Trends, and Guru Focus, so blame them instead. So, third metric, price to free cash flow is within my threshold, 18.84, but the PE is high, so I'm not buying this stock for this metric. No dividends, no fourth metric. Historical data suggests that it's trading at a discount now. PE, price to free cash flow, and PB ratios wise. Historical PE suggests that the stock has always been trading at 30s of PE. I don't think it should trade at those PEs. I think it should trade at low 20s to mid 20s, not 30s. Price to free cash flow, I have an allowable of 20, so I don't stress much about this metric. Same with the PB ratio. I have an allowable of 5 PB. Current PB ratio is 1.74. Now guys, this is cheap. Very cheap for a growth stock and a giant tech stock from China. If you're buying Baba, use this excuse. It's only trading at 1.74 times book value. Current ratio is strong for the quarter, 1.66, very low debt levels. They're virtually debtless because of their strong cash position and free cash flow. Again, this is Baba's valuation summary. Only the historical metrics look good here. I still think it's trading at a premium. I don't own the stock. I think paying premium for the stock is reasonable. Look at the revenue growth. 20 to 50% year-over-year growth. Very impressive numbers. I wouldn't recommend adding to your existing positions here though. I have a fair value of $75, down from $79 last quarter because of the much lower EPS. Again, this is not with multiples. I don't buy stocks with multiples, although Guru focuses intrinsic value says otherwise at 166. I mean, if we use the peak EPS here of 8.35, you'd get around those prices. But again, I don't think it's worth that much at the moment, at the current market situation, so I'd stick with my $75 entry. Here are my entry PEs and prices with 50% margin of safety, 14, 16, 18 PEs. And this is why I haven't bought BABA just yet. I want my risks priced in. I have a high entry price of $65. Last time it was $67. I get BABA at these prices, I'd buy hard. I just want to be clear, fellow investors. I look at stocks the same way. I just use different margins of safety from one stock to the other. This could be because of the moat or business model, the conversion issues, especially for non-US stocks, and depending on the sectors. I think I screened BABA like the other stocks. I hardly discussed their fundamentals. One, because I don't know what's happening in China. It's not like the US. Two, I don't fully understand their numbers, their financials. Why it's kind of all over the place. Are they spending or what? I don't know. I mean, I tried looking at their quarterly reports. I mean, look at this 48-page report. I found it harder to understand than most stocks IR. I'm not being too hard on BABA because it's a China stock. I just want my risks discounted and my precious dividends. That's my take on BABA. I think fair value is around $75. I'd enter the stock at $65.